Welcome. You're watching The Big Question. I'm Tamanna Inamdar. After days of uncertainty, meltdown in global markets, investor sentiment dampening, and fears of global recession and slowdown looming large, it looks like truce has been called in Trump's tariff war. At least for now. Both USA and China have agreed to lower tariffs for a 90-day period, effectively hitting a pause in their escalating trade war. While US tariffs have dropped from 145% to 30%, China has slashed tariffs from 125% to 10%. That's a whopping 115% drop in tariffs by both sides. The resolution comes about after trade talks in Geneva by representatives of both sides. President Donald Trump too praised the deal and said that the US intention was not to hurt China.
The talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing. But one of the biggest things that we're doing, and I don't know if people realize this, but we made a great deal with China, a great trade deal, but it was a much bigger deal originally, and then they canceled it right in the last day. Some of you faces I remember were there when that happened. I remember you. And we had a deal where they opened up their country to trade with the United States. And they took that away at the last moment, and then I canceled the whole thing. And then 6 months later, we ended up doing a smaller deal, but it was a big deal. It was $50 billion worth of product that they were going to purchase from our farmers, et cetera.
Okay, the move is significant as the duties that Trump slapped on China effectively established a trade embargo with one of America's largest suppliers. Both countries form the world's largest economies. China is also the biggest contributor to USA's over $1 trillion deficit. Remember, the U.S. goods trade deficit with China was $295.4 billion in 2024. The relief was evident for U.S. markets. Wall Street indices rallied. The S&P 500 closed at its highest level since the 3rd of March, and NASDAQ recorded its highest close since Feb 28th. Now, as to why both countries have chosen to press pause in this tariff war, of course, Trump tariffs were hurting the domestic economy's consumers. America's top retailers like Walmart, IKEA, who have significant imports from China, warned of supply chains being hit and store shelves becoming empty. The U.S. economy contracted in the first quarter of 2025 amidst concerns of a U.S. recession. This, coupled with rising prices of essentials, heightened the odds of the U.S. facing a stagflation. So economic stagnation plus high inflation. That's what stagflation is. As for China, in April, China's manufacturing activity fell more than expected to a 16-month low, threatening millions of jobs. So there were clear warning signs for both sides. In fact, China is not the only country that Trump has moved in for a thaw. Just last week, the USA and UK signed a trade deal which saw the US reducing or removing tariffs on some key exports like cars, steel, and aluminum. Meanwhile, just this morning, India has proposed a counter duty on US products in the WTO over US tariffs on steel and aluminum. So the question is, what are we seeing right now? Is Trump's trade war truly over, or is this only the first episode? To speak on this, I'm joined today by Dr. Arup Raha, Chief Economist, APAC Oxford Economics, Deepak Chinoy, founder and CEO of Capital Mine, and of course, Jim Rogers, veteran international investor. Welcome to all of you, and thank you so much for speaking with us today. You know, what we're seeing when we report a 115% drop in tariffs reminds me of sometimes when we go shopping and we're told you have a huge discount on what you're buying. But the fact is that the original price was first hiked up, and then you got that big discount on the face of it. So 115% needs to be seen in that context. Jim Rogers, is the trade war truly over?
No, Tamanna, the situation with Mr. Trump is, next week he'll watch something on TV and change his mind. Somebody like Margaret Thatcher, we at least knew what she would think and how she would change her mind. Mr. Trump, it depends on what he watches. If he watches NDTV, he's going to change his mind, and he'll have a different view. It makes it very difficult for people like you and people like me.
Okay, so he could change his mind. For now, Dr. Arup Raha, what is the extent of relief you see? Because now the next step is even this 30% tariff that US is imposing on China, 20% of it is linked to fentanyl, etc. There can be a further drawdown with China being able to convince the US that no, we're not sending in fentanyl, and so bring it back to a 10 and 10.
You very much for having me, and please call me Arup. Dr. Raha, I don't quite answer well too.
Okay.
So, just in simple terms, the U.S. has changed its mind many times on how they are going about it. Fentanyl is one of the stories that finally came out. I don't think that is really the clincher here. Mr. Trump has always seen tariffs as a legitimate economic instrument because he views imbalances or deficits run by the U.S. as that the U.S. is somehow being cheated, that it's something, and not realizing that it's really a function of the savings investment gap in the U.S. I think this story isn't over yet. I think you're going to get a fair amount that's going to play out. But it's a good sign that actually they have come down on tariffs. I think there's been a recognition, at least on the U.S. side, that tariffs are a tax paid by the U.S. consumer or producer or whoever imports in the products. And hopefully it'll sort itself out. Markets seem to be quite happy about it.
Okay, markets seem to be quite happy about it. Deepak, how are you seeing it? Is this going to be, at the end of the day, people saying that, look, the Trump madness works? If the end result, whatever it looks like, is better than when Trump took over and launched this trade war, it would seem that he's made his point.
Well, I think you can paint anything as a victory, but honestly, I think it's the US that kind of had to blink because while China is hurting, China can take a lot more pain, I think, than the US can. Also because they're an autocratic economy, I don't think the instances of pain will be allowed to be magnified more than their government wants to. Well, America's relatively more free economy has greater indications of that these things will become in the forefront and will hurt effectively the politics as well. I don't think this was a victory really. It was more like, oh my God, we have to do something fast, otherwise everything's going to hell and back. And things kind of had to be brought in very quickly. China's tariffs on America are almost like a joke because China doesn't import quite that much, and it does have other sources to import from, even if it needed to, diversify. But I feel here this is just the beginning. Every country, and in the end, this comes down to fiscal. We're all talking of trade. Right? America is the world's largest service exporter. There are no tariffs on American services, or America is not charging tariffs on services because they don't want the world to charge services on tariffs on their services. So it's a one-sided game here on merchandise, and we're not talking services. So I think the trade barriers and trade wars are just starting. We're going to see a lot more of this.
Okay.
I don't think America.
So interesting perspective. Deepak says we're just seeing the beginning. Deepak, how did you see the announcement of what India has done in the World Trade Organization, that announcement that came in this morning on reciprocal tariffs on certain products in steel and aluminum, etc.?
Well, it's steel and aluminum, so I don't think, it's like we've imposed tariffs on steel and aluminum in different ways. There was a point at which even with a free trade agreement with South Korea, we imposed tariffs on South Korean steel because it was like an anti-dumping. It was something called a safeguard duty that said you have to import at a minimum of, I think, some $600 or something per ton or something like that. Even if you take it from a free trade country with which we have a free trade agreement. So India likes to do this primarily because our steel industries are a big employer, and B, they're also such a huge borrower from the banking system. So we don't want to see the steel bankruptcies that we saw in the 2010s again. But we're not imposing tariffs on the stuff that we really import, which is chips and laptops and things like that, which eventually come from the US. A large amount of the money that we see spent even by Indian startups goes to Google and Facebook and all that stuff. And I think, our tariff measure is more like, listen, we've got to do something, but I don't think this is meaningful.
You know, I just want to put into context something else that Trump said yesterday. I'm just going to continue that point with Deepak and then come to the others for their view. When he was talking about China and this entire deal, Donald Trump started referencing India, Pakistan and the ceasefire, which was a bit strange. Let me just play out that comment first and then we'll come to a discussion around it.
My administration helped broker a full and immediate ceasefire, I think a permanent one, between India and Pakistan, ending a dangerous conflict of two nations with lots of nuclear weapons. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it, that I can tell you. And all of a sudden they said, I think we're going to stop. And they have. And they did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India.
So, this didn't sit too well. This didn't sit too well because I can understand trade as a tool for negotiation in the context of trade. But when you talk about trade as a leverage for a national security matter and one which is as grave as what we have seen in the last 36 hours, Deepak, what does that tell us? What kind of a deal can anyone make with the United States?
No, you can't. You could never do it. In the 1960s, when there was a famine in India, America tried to put conditions on exporting wheat to our country, saying that, listen, unless you open up this and do that, we're not going to allow you to get wheat, even though there's a famine and there's a problem in India. So it's always been like these things are interlinked. So we should not expect that anybody is our friend over here, right? So that's why we started the green revolution in India, and now India has surplus wheat and all that stuff. So it just proves you have to be self-sufficient. We don't do meaningful amount of trade with America. Of course, services we do, but merchandise, we're relatively small as a country. Pakistan is almost hilarious in terms of trade volumes. The amount they raised from the IMF with whatever they did yesterday was $1 billion. Our startups raise more than that. So it's pretty much like, it's a very uneven game here. To hyphenate both our countries is almost like, I don't know what to say. But, politics is politics. You've got to play it.
But that's the thing, the politics of trade. How seriously can you take it? We're still waiting for the bilateral trade agreement with the US and India, which is why, Jim, let me come to, and full circle this. We've talked about US, China. We've seen US, UK. As far as US and India is concerned, this episode has kind of soured that conversation, or there's more that we can wait and see?
But Taman, I will just say that if you're looking for consistency from Washington, you're in the wrong business. They don't know how to be consistent because they don't have their own consistent guiding principles. They do what they feel like that morning, or what their constituents call them and tell them. Mr. Trump wants votes. That's the most important for him. And if he sees on NDTV that, people aren't voting for him, he will change his mind.
Okay, now having said that, you made that, you're consistent in your view, at least I would say that, Jim. But then as an investor, as a veteran investor, how do you navigate this? Now, when you see the kind of surge we saw on Wall Street, you'll see them in many global markets. Do you now take a position that this will continue, or do you hedge your bets? How do you navigate what's happening?
Well, I personally have a lot of cash, US dollar cash, in the United States because the market's been going up for the longest in American history. And I know that Washington doesn't really know what it wants. They want to get rich. Well, everybody wants to get rich. So I don't see any consistency for me as an investor yet.
So no consistency as an investor. Arup, from the point of view of economic impact, more bilaterals, more one-on-one conversations, and do you see major trading partners now looking for conversations which don't necessarily have the United States in the middle of it?
that would be a natural effect of this, right? I mean, given, as Jim's very rightly pointed out, that it's not just Trump's policies, it's that he keeps changing his mind. There's a certain unpredictability. There's a fair amount there, and you really don't want to expose yourself to that. At the same time, the US is the world's largest market, so you can't also ignore it. But I think people, I mean, you've already started seeing it in terms of their neighbors, Canada, Mexico, starting to look for other alternatives, trying to strike trade deals elsewhere. And I think you're going to see a fair amount of it, that the people will try and lower their dependency on the US markets. That was what I was saying. But there's more to this, because one is the trade element to it. The other is the uncertainty that's been there and the effect that's having in terms of decision making, etc. And I think that's going to be the more lasting effect of what's happened on the trade side, rather than the actual trade friction. It's the uncertainty around it.
How would you look at the impact of that uncertainty, question to Arup again, on the US economy and on the global economy?
Well, the uncertainties, I mean, a few things are happening, right? People are not striking long-term contracts the way they used to. Even if you look at trade deals, they're typically struck, say, around the beginning of April, and they last for a year. Right now, it's pretty much being, we'll just see what happens, that kind of thing. And the larger impact, though, is really going to be on investment, fixed asset investment. Are you really going to build a factory when you're unsure of what's going to happen? So you are looking at a downturn in growth no matter what. I mean, he could strike all tariffs down tomorrow, but the fact is that people are uncertain. They don't know what's going to happen, what kind of policies are going to come out from the US, and that is going to affect medium-term decisions. And I think that's going to be the larger effect of growth over the next couple of years, larger effect on growth for the next couple of years.
In terms of the Indian economy, and just to follow up for Arup over there, what do you see as the impact going forward? We don't have a bilateral trade agreement yet. If China is right now at 30% and India is at 27%, then the advantage that we were celebrating has now pretty much disappeared. Say we look at a base 10% and China comes down to a 10%, then that advantage disappears as well, isn't it?
And Deepak brought this point out. To be honest, we are really not competing with China. I mean, it's a different basket. They have different levels of competitiveness. So even if China's share goes down, which it has been, but you're seeing rather that a Vietnam is benefiting, a Korea is benefiting, etc. So we are not really benefiting. Our trade, the overlap between what we export and what China exports is very tiny. So it's not really a gain from us. I think the main gain that we will have if this thing works out is not the gain from striking a deal at the expense of China, but I think risk premium should come down if we strike a deal, which would bring some stability into the markets and help decision making. I think that's the larger impact right now.
Having said that, Deepak, I mean, it was just very recently that we were all celebrating Apple saying that they're going to move a bulk of their manufacturing from China to India. So that did happen in the context of all of these trade conversations. And I understand completely it's not in the same realm right now. But as a growing power, India is being pitted as an alternative down the line, isn't it?
At some point, yes, but we're like a mosquito compared to an elephant in terms of the scale and size of what China does compared to what we do. So yeah, we can say we're big, but I don't think we are in terms of the numbers, in terms of capacity, in terms of investments. It will take us a decade to get there. So, I mean, I'm cognizant of the fact that we want to be more into manufacturing, but I think at best we can manufacture more for India. Compared to trying to manufacture for the whole world. We just don't have that depth right now, and it takes a lot to build something. It's difficult to build a Silicon Valley somewhere else, and it's difficult to build a China somewhere else, and that's because they've all nurtured their particular industries for so long that the ecosystem is really, really well entrenched there. So I don't think it's easy for me to say we'll benefit and try to compete in any meaningful way with China. Some things help, yes. An iPhone factory, which is run by Chinese people in India, is an alternative, yes. But is it really diversifying away from China? Not meaningfully, other than the fact that geographically you're located in India. So I would say to some extent, maybe, but let's not rejoice too early.
fair enough. But, the advantage India was not necessarily on manufacturing competitiveness or prowess. It is because India is seen as a more trusted source, right? So whether it's pharmaceuticals, and then you have the laws that the United States is mulling right now, where they don't want to be in China for some very, very core products. Maybe that's the context of the iPhone manufacturing shifting, etc. Are you saying that that advantage now disappears after what Trump has said yesterday, where he's saying that, she is my friend, etc.? Deepak, the question to you.
Yeah, no, I don't think that's going to vanish, because if you see what has happened so far, the only thing that you know is you can't trust what Trump will actually say tomorrow. So it's possible that these whole tariff things come back, and therefore, having a dependence on one country for any manufacturer would be a problem. So they might want to diversify away and say, well, we got to have another facility somewhere else. We might depend on China for X, but we'll have another Y quantity coming in from another country. It could be Vietnam, Korea, India, or any of the other sources. So, yeah, so there will be this fear that continues. I don't think equalizing tariffs, or saying that this is a trade deal is done, will suffice anymore, because people have realized that the situation is volatile, and we've got somebody who is as volatile as a president of the US. So you are going to have you're going to have to say that, listen, tomorrow if something else comes up, we're going to have to diversify. So I think this is true for India as well. We are not trusted any more than for convenience. We are, in the process, we are just another country that's external to the US. And at some extent, if we became very big, then there would be a problem on the same lines of thinking as they have for China today.
Do you agree with that, Jim? That equivalence still remains? And what do you make of the tone and tenor of what Trump is saying? He's suddenly very, very friendly when he's talking about the Chinese premier, as opposed to what he was saying a few days ago.
I will say that one of the things that has happened in the last several weeks is that, to me, India has become much more reliable. Delhi, for the first time in my investing life, understands economics. I understand that prosperity is good. And if you ask me, I really want to invest in India now in a more permanent way, because somebody now understands economics in Delhi. And I've been investing in India for decades. They never understood economics before, but something has happened. I hope I'm right. India is going to be much more exciting, if that's a correct assessment.
So how much of your cash that you're sitting on are you putting in India, Jim?
I have zero in India right now, but if you'll get the market to go down, Tamana, I'll invest a lot there. So when you hang up, please do your best to get the market, Indian market, to go down. Tell them Tamana sent me.
Yeah, no, I don't think there's any such magic powers, and no one here wants the market to go down at all. But in terms of impact, Deepak, since, we speak equities constantly, in terms of impact, do you think that the US-China trade euphoria is done and dusted? It's a half-a-day event for the Indian markets, because we saw that big bump up yesterday. And today, of course, a day of consolidation. But there's a lot more to come through this, isn't it? Because the trade war fears went on for weeks and impacted several sectors.
Well, not meaningfully. The market was down less than 10%. So I think, there's some stocks which would have fallen more. But honestly, this is not as big an impact overall than a lot of other events that have happened. In fact, the market fell more when foreign investors pulled out last year than they did with this entire tariff thing, and including the geopolitical situation that happened. So I don't think this is a meaningful response by markets, as long as the Indian economy is doing well, and we are so inward facing compared to depending on exports, that our local economy matters a lot more for our markets than what's happening perhaps geographically worldwide as well. I would say that the true impact of whatever is happening is probably going to be visible only in the later half of this year, as all of these things crystallize and develop. Equity markets, there are parts of which are significantly overvalued, there are parts of which have a long way to go. But I think the contours will change as they always do, once in a decade, there will be a shift to something else. It may be IT that was ruling the first decade of this century, and then it was FMCG perhaps in the second, and then now it may be the turn for manufacturing and defense and domestic consumption. So I think, we will see some of those contours or changes take place. But I won't place too much hope on, resolution through trade. I think this is going to be a very volatile year for politics. The trade war has just started, so expect a lot more of it, not less.
So what I'm hearing from our panelists, and the question that we posed today is the trade war over? Deepak Shenoy says it's just starting. Jim Rogers saying that anything can happen at any minute. Arup, what are you saying to that core question of is the trade war over?
It's a mix of what both of them are saying, that it's not over and anything can happen at any time. I think Jim's nailed it. I mean, it's not Trump's policies per se that matter. It's the unpredictability of his policies that are largely to have a lot bigger impact. So that's where I am.
It's a bit like the pause that we're seeing on the line of control right now. Everyone's ready for what happens next. But it's a pause for now. Maybe it's a pause in the trade war more than anything else. Thank you so much, Jim, Deepak, and of course, Arup, for joining us on the show today. And to all of our viewers, thank you for tuning in. Give us feedback on the show. We're waiting to hear from you. Tell us what you want us to cover.